Hello, I'm Scott Burns, Morningstar's Global Head of Asset Management Solutions. Thanks for watching this video that's part of our Asset Management Quarterly Newsletter series. Today I'm joined by Lee Davidson and Madison Sargis. We're going to talk about what factors drive fund flows. I know the viewers of this segment are super interested in that. That's a big part of their jobs. And you guys have been doing a ton of research around that. So you wrote a paper a couple months ago about what factors drive fund flows. Can you talk about that paper a little bit?
Yeah, absolutely. So it was one of the largest analytical looks at mutual fund flows globally. So we looked at over 87,000 mutual funds globally, and we were really looking at the fundamental drivers. What types of fund characteristics do investors seem to prefer? We were trying to hone in and isolate on the specific types of characteristics, controlling for their differences. We found a lot of different things. I mean, obviously performance is a big driver, fees are a big driver, index, types of fund structure, but we also found things like firm reputation really matters when you're launching new products. The types of managers that you hire, how those managers turn over at funds in different firms. All those types of things go into ultimately an investor's decision-making, kind of their calculus with what types of funds they want to buy. What we found was that new funds are particularly hard to forecast what's going to happen to them in terms of their flows. That was one of the big weak points of the paper that we published last year. And the reason is just because there's not that much data about them, right? So we see these funds launch, they don't have a track record. The manager maybe doesn't have much history. We're not collecting that much information about them. And so it's just more difficult. And so this paper that Madison and I have written really tries to hone in on specifically on that cohort of funds, those new funds, and identify the type of factors that would drive success of their launches.
Right. Now, Madison, for those viewing, why is it so important that we care about what drives flows into new funds?
Yeah, new funds account for about 75% of all flows into open-end funds. So that's totally surprising.
even in my experience, I'm always kind of shocked to hear that it's still the new funds without the track record that drive all the flows. So Madison, I think a lot of people naturally think that the number one driver of assets into a new fund is to make sure that you launch it into a hot category. Is that what the research showed?
No.
No?
Actually, we looked at that, and that's actually not really a big driver of flows into new funds.
So it's kind of a neutral aspect, but there are a couple other success factors. So things like the ownership signal, what's that all about?
Yeah, so we wanted to look at whether or not the manager invested into their own fund and what signal that sent to investors. And that sends a really strong signal to investors, and they prefer to invest in funds that do have manager ownership.
Right, so it's that old adage, nobody washes a rental car, that we like to say at Morningstar. So even for new funds, that shows a difference. Now, you know, the other thing, and we're so big on it at Morningstar, was about portfolio disclosure and transparency, and you found a really high correlation with that, correct?
Yeah, so we looked at whether or not they reported their portfolio and how frequently they reported, and both of those are preferred by investors.
There's absolutely no downside in the data that we found for reporting more portfolios, right? For being more transparent.
Wow, I think that's really powerful stuff. So not all the factors that you looked at in the study are necessarily success factors. We found some activities that are detractors when it comes to a new fund launch. One of them, which you interestingly named Cannibalization Effect. You know, what's that all about? Is it really like one fund eating another fund? Like, does that happen?
Kind of, yeah. So we wanted to look at how firms should operationalize fund launches. Is launching many funds at once going to harm the individual's fund's ability to gather assets? And that's exactly what we find.
Right, so it really is, it's about focus, right? And if there's a lack of focus, that's a negative. And so if you're launching lots of funds at once, there's probably just, you know, too much distraction for the team, too much fight for assets from the same, you know, sales force, things like that. I mean, I think a lot of that's kind of intuitive, but I think, you know, we'd find a lot of folks out in the industry who think the other way, that, you know, you put a lot out there and see what grows, but it's definitely, you know, focus. According to the data, it's better to be focused than unfocused. You know, and the last thing then, you know, has to do with what's happening in the field with competition. So there's a monopolistic category headwinds. You know, what's that about? Maybe Lee, you want to jump on that one?
Yeah, absolutely. So I think there's two aspects to this. And the first is if you're launching a fund into a category that is characterized by being a monopoly, right? So maybe, you know, one particular fund has all the assets in that category. That historically in the data we've seen new funds really struggle in that environment. The counter to that is unless you are the monopolist. So if you are the monopolist and you do have that monopoly in the category, that's been a big benefit.
You know, I think a lot of folks look at it and say, there's a big fund, it's got a big target on its back, let's go get it, but that doesn't necessarily prove out. All right, well, thank you, Madison, and thank you, Lee, for sharing your insights around what factors drive fund flows. Thank you for watching. I know you're interested in this stuff. You can find links to the white papers below this video. And if you have any questions, feel free to reach out to the team at Morningstar. We'd be happy to connect you with our quantitative research team on not only what factors drive fund flows, but any other quantitative research things you may have questions about. I'm Scott Burns with Morningstar. Thanks for watching.